The European Central Bank has chosen to keep interest rates the same at 0.75%. I'm joined down the line today by Joe Tigay, Investment Adviser at Stutland Equities LLC in Chicago, to discuss this decision and its implications for both the European economy and the markets. Mr. Tigay, thank you for joining me. Firstly, was the result today expected?
Yeah, the decision to keep the rates unchanged at 7.5% was what I was expecting, what was the market was expecting. But the big surprise that came out of the meeting was the wording of the statement. Draghi had indicated before that a rate drop could be possible, but in this statement he said that a further rate reduction would not help the current crisis. So the market has responded to that by sending the euro up, and it was a little bit of a surprise, but not a major one.
Do you feel the ECB is running out of options to provide stimulus?
Well, they still can lower rates a couple of times here. They can go even lower than the historically low rates of 0.75%, but and they still have the magic bullet that really stabilized the markets last year when they said that they can go in and purchase sovereign debt. So they still have tools, and they're just biding their time, so to speak, is what Draghi's plan is, to just ease the market back slowly.
The ECB has forecast the Eurozone economy will shrink 0.3% in 2013. Do you see any recovery starting to happen this year?
Well, I would say that the economy shrinking of 0.3%, while it's not great news, the pace of contraction is significantly lower. So while it is a contraction, it's better than it had been before. And as we slowly work out of some of these financial crises, time is the biggest healer. So if we can have a close to flat year, then that'll be a good sign going forward.
What effect will the decision today have on the volatility in the markets?
Well, it actually seems like a vote of confidence to Europe. A lot of money would be flowing into Europe to buy up the sovereign debt, which is driving the euro higher. And actually, also European markets higher today. So a little bit of vote of confidence, and in fact, that when the debt comes lower, the rates on the debt comes lower, that volatility comes down also. So we're seeing lower volatility, near-term volatility expectations, and more confidence in the near term of the market right now.
Looking specifically at the euro, do you feel discussions today will drive euro weakness?
Well, in a global economy, every single central bank is lowering their rates. To have one that is not, that'll be the one that will go up. So, in other words, money will come into Europe, which will be good for people trying to issue debt, but not necessarily good for the economy looking to make exports.
Thank you, Mr. Tigay, for giving us your opinions and insights. I'll be back tomorrow with the results of the UK manufacturing data. Goodbye for now.